The tale begins with a series of signals from several central banks, indicating a shift towards looser monetary policy. A surprise protagonist in this story was the Swiss National Bank, which took the bold step of reducing its main key rate from 1.75% to 1.5%. This marked the first major rate cut by a central bank in the developed world in this cycle, with inflation forecast to remain below 2% over the next few years. Joining the Swiss in this dovish stance were the Bank of England and the Federal Reserve. The former held steady at a 5.25% rate during its March meeting, hinting at favorable conditions for potential interest rate reductions. Meanwhile, the latter maintained its outlook for 3 rate cuts this year, signaling a lack of concern over a recent rebound in price pressures. This series of events sparked a rally in the European markets, with the Stoxx 600 surpassing its record high of 509, and the UK's FTSE 100 approaching its all-time peak of 8,047. Across the pond, the 3 leading US stock indices soared to their highest levels, and the US dollar made a remarkable turnaround, bouncing back from a dip to 103.17. The markets were further bolstered by positive economic indicators, such as the US flash manufacturing PMI reaching a 2-year high in March, existing home sales surging to a 1-year high of 4.38 million, and unexpected declines in weekly jobless claims. However, it wasn't all sunshine and rainbows in the financial markets. COMEX gold futures, after initially hitting a fresh record high, ended the week flat, and silver registered a 2% weekly loss, reflecting weakness in industrial metals. The oil market also experienced its share of drama, with WTI crude oil surging to its highest level since November, only to retreat to $81 a barrel as geopolitical tensions eased. In the East, LME base metals faced downward pressure as the China property debt crisis extended for the 4th consecutive year. Sentiments towards the Chinese property market remain pessimistic, posing a threat to metal demand. To summarize, last week's financial market story was one of optimism, driven by dovish signals from central banks, positive economic indicators, and resilience in the US economy. However, challenges remained, as reflected in the performance of gold, silver, and base metals, and the ongoing China property debt crisis. As we look ahead, the spotlight will be on Fed Chair Jerome Powell's speech, the US PCE price index, and the final Q3 GDP figures. These events could either bolster the greenback and pose a challenge for bullion prices, or support further rate cuts. So that's the tale of last week's global financial markets. It's a story of optimism, resilience, and challenges, reflecting the intricate and interconnected nature of global economics. Stay tuned for what next week's chapter will bring.